Tyler, lots of big news hitting the news feeds in the EVs space right now. VW is in the middle of a lot of them. The one I want to talk about with you right now is Rivian. You read the headlines, and VW is making a $5 billion investment in Rivian. There's more nuance to it that I think a lot of investors need to understand. You need to get right when you're thinking about VW's quote unquote big bet on Rivian. You ready to go through the details to make sure investors are prepared with the right information to make the best investing decisions?
Jason, we're going to do that really exciting thing that people love to watch on YouTube, and that's dig really deep into SEC filings. So yeah, let's go.
The bottom line is that somebody needs to do it, and it might as well be you, and it might as well be me. So we're going to get right to it. I'm Jason Hall. This is Investing Unscripted here with Tyler Crow. This video is sponsored by the Motley Fool. So we're going to come to some conclusions about these EV stock investments. We have a great opportunity for you to get even more great stock ideas. Check out our special link. You see it on the screen. This video is sponsored by the Motley Fool. If you go to that link, fool.com/unscripted, you can get access to the Motley Fool's 10 best stocks to buy right now. It's worth your time. Go check it out. Tyler, so you mentioned SEC filings. Chances are most people that if you heard about this deal, either you saw the headline on YouTube or through our partner, the Motley Fool, for this video, or you saw it on Reuters or one of the other big news sites. And in general, what the ones that I've read say is some different version of VW makes $5 billion investment into Rivian. That's sort of true. Let's talk about what it really is.
Yeah, it's because it's not straight up like $5 billion of, Volkswagen buying the stock of Volkswagen, right? It's actually broken up into three separate sort of things, right? The first is, like they said, there's going to be a joint venture. That's probably the biggest part of this deal, is that the companies are doing a shared joint venture for the most part. And reading through the SEC filing, it's basically saying Volkswagen wants some help with their electric vehicle architecture, as well as some of the software that Rivian has for some of its on-screen, so some of the control systems that they have that Volkswagen's been a little bit lacking. Volkswagen has been pretty active when it comes to either joint ventures or investing in these startup companies as of late. You and I have done quite a few videos on solid state battery companies, QuantumScape, where Volkswagen has been a significant contributor to them, as well as, then like their gatekeeper, if you will, like to the business. That's the biggest part of this entire deal between Rivian and Volkswagen, excuse me, is this joint venture. It's about $2 billion for this $5 billion
Well, we'll get to that in
investment
just
we're
a
talking
second. But again, this is in the SEC filing right here. I've got it pulled up on the screen. The one thing that Rivian is absolutely getting, this is the only thing they're guaranteed to get, is that $1 billion, right? That $1 billion investment. This is the only thing that's promised. But you're
Yep.
absolutely right. Now, again, here's the other thing. It's not just they're giving Rivian $1 billion to get stock back. This is convertible notes. So there's a 4.75% interest rate that comes along with it, that every 6 months, Rivian's going to have to whip out the checkbook and send some money back to VW. Now, Rivian needs the capital. We know that, right? So this is a lifeline. This is something to help them with their efforts. But this, like you said, this is what VW is really getting out of it, the JV, right?
So that's where most of the money for this investment's going, because it's $2 billion of this $5 billion is going into the JV, as well as, like you said, that $1 billion injection at convertible notes. And I'm just going to go off on a slight kind of tangent on the convertible notes. I think if readers or viewers had seen what Jason highlighted on the screen, these are notes that have a interest rate of what is it?
That's right.
Yeah, 4.75 per year. For convertible
4.75%.
notes,
That's right.
like Jason, you and we've
That's
seen a
very
lot
high.
for a lot of companies that have been issuing convertible notes, that's pretty high, which is kind of an indication of
Well, we
where
recently did a
Rivian
video,
is.
SolarEdge, a company that we've covered pretty closely, just issued $300 million in convertible notes at 2.25%. So yeah, this is certainly on the higher end. One of the reasons companies will do convertibles is because they can get the lower cost of capital to do it.
Yeah, which kind of says like what the type of like straight debt probably would have, like the interest rates that would have been required for just issuing regular debt. So a high price to pay for a cost of debt, and the conversion price for this is pretty cheap. It's what is it, $10.80 something cents, which is below where the stock is
Yeah,
today. I
and
think it
this
was right
the
around
stock,
where
just for context, I'm gonna pull it up on the screen right here. The stock as we're recording this is about $14 a share, right? So
right.
that $10 a share was basically where Rivian stock, the average that it had traded for a 30-day trading period prior to the agreement being reached. So that's the key. I wanna jump back to this. We're probably boring some people, but this minutia really matters a lot. So again, we know Volkswagen is gonna cut a check to Rivian for $1 billion. The capital is going to help them. It's going to help fund their operations, R&D, some they can probably put towards trying to get some sort of manufacturing scale that'll make sense. And if things go well and they reach the decision to form that joint venture, then the other $4 billion starts to become available. But to your point, now $2 billion of that could come into Rivian's coffers in the form of common stock. So no convertibles, no warrants, no weird mechanisms, just buying stock, right? For $2 billion. So we're talking about potentially as much as $3 billion in cash Rivian can use onto its balance sheet over the next 3 years, $1 billion this year, and then another billion in 25 and 22, 26. Again, subject to certain milestones. Now, it's a little more to it though. With the JV, there's that other $2 billion related to the JV. They formed the JV, and this whole thing, except for that initial $1 billion, this whole thing is reliant on the formation of that JV. Here's the thing: $1 billion of it would be funded to the JV, but even the JV is not getting just $2 billion. The other billion alone, right? So a couple things that I have for takeaways for this, and I'd like to hear your thoughts too. Volkswagen, I think, is positioning this investment in some really smart ways where they're maximizing their leverage as a provider of capital, right? We talked about earning some interest on the convertible notes. That's not a big deal. That money's almost irrelevant for VW's bottom line, but it shows that it has leverage. The convertible
It
price, again, 10
it
bucks a
moves you up
share.
the capital stack.
That's the key, right? That is the key. That is really, really important, I think, to structure it that way. And then for any additional capital that they're going to provide to Rivian, Rivian has to earn it. They have to earn it. And also it means that to a certain extent, VW is a little bit protected if the market for EVs remains soft as well, because it's going to be hard for Rivian to meet all of the goals that are going to be laid out if the market's not healthy, right? So they're also kind of hedging their bets based on how the demand cycle plays out, which I think is valuable. And then you start thinking about the joint venture, which I think is a big thing that they want as well, to have access to some shared technology. They're not just going to fully fund it. They're going to fund it, but they're also going to protect access to the capital that they provide as well by making part of it a loan. So I think that's really showing that they have the leverage here, and that Rivian is in a weak negotiating position, and there's no guarantee that that position is really going to get any stronger.
Yeah, I think there could be a little bit of confusion, like we said at the top. Like, this is not, Volkswagen just cutting a check for $5 billion, buying stock or whatever. This looks like a very structured deal in a way that if it goes really well and Rivian is a giant success, Volkswagen is going to share in that success. If things go a little sideways, Volkswagen has positioned itself to gain some sort of control over the company if things were to go bad, with, like I said, moving up the capital stack, being ahead of equity, on the for ahead of common shareholders. So it puts it into a position that if Rivian's financials were to get substantially worse, Volkswagen could swoop in and potentially acquire the company if things are going worse. So it's a little bit of a hedged bet, saying if it goes great, we're going to participate in it, and if it doesn't, we could use these assets in other ways.
My last question for you is: do you think there's anything happening here that makes Rivian compelling to you as a stock that you'd consider buying?
I don't know if this deal is like a game changer for me. I think what is really going to matter for Rivian is it's the issuance of its next, or release of its next vehicle, the R2, and trying to basically eke out as much efficiency as possible at its existing facility in Illinois. There was that really hyper ambitious plan of, oh, and we're also going to build this gigantic plant in Georgia, but the demand just hasn't been there. Things have gotten a little bit more tepid. So if like 6 to 9 months from now, we're seeing some real traction in terms of efficiency gains, in terms of being able to increase deliveries while maintaining this smaller footprint, that to me would be a better signal about the kind of investability of Rivian than this deal necessarily, because this deal to me looks like a way of Volkswagen being able to swoop in and acquire these assets on the cheap if things were to go worse, more so than being like, yeah, Rivian's going to do awesome and we want to participate in that.
Yeah, I think that's fair. It's a perfect reminder that sometimes larger capital can just get better terms and put itself ahead of the rest of us in line. And that's what Volkswagen has done. I do think it indicates some confidence in their technology and their ability to design a great vehicle. The R1 is a very well received vehicle. The market is tepid right now, and you got to deliver the financial results as well. I think you're exactly right about that. So makes the story more interesting to me to follow. Like you, I don't think this necessarily is the seal of approval for me that now's the time to buy Rivian stock.